It's hard to believe we've just went right through another week so quickly, but we've seen a lot of activity. The markets have continued to move above the 4100 level overnight. We're continuing to see the momentum increase as well as continued traction on our database, which I'll go through here shortly. But from a technical viewpoint, we're seeing all types of acceleration, including actually reaching an extreme on the weekly basis, which I'll go through details here in a minute as well. As we look back at yesterday, the continuing claims came in at 3.7 million. And as I've discussed over the past several weeks, that I don't think this number will be impactful until we get under 3.2. We also saw the claims come in at 744, which was about 16,000 increase, and the expectations were for around a 690. So that was a little worse on that number, but markets didn't seem to care much. The S&P was up 0.4 on the day, NASDAQ up 1%, and the Russell up 0.9. The interesting thing to talk about here, and I've been discussing this on the NASDAQ starting to claim back that leadership that they had. As we look at the year-to-date numbers, the S&P is up 9.1, NASDAQ up 7.3 now. It was only up about 1% just a couple of weeks ago, and the Russell is now up 13.6. It was up around 19+% on the year. It was way leading everything. That trade is completely crumbling. As I talked about a number of weeks ago, I thought that the NASDAQ would start to claw back that leadership and move toward an all-time high, and we're seeing some pretty decent strength overnight in the NASDAQ. The Russell is absolutely flat on the night from the future standpoint. We'll see how tomorrow plays out, but with this PPI number coming out tomorrow, this is going to be the significant thing to watch, as it's expected to come up 0.2. If it comes in more than 0.3, that would be a big negative. I think we'll see interest rates kick up. The 10-year has been fading for about 3, maybe 4 sessions now, and I still expect to see interest rates come in. I would say that it's probable that the PPI is going to come in at least as expected, and there's not going to be any surprises there. So that should help the 10-year to continue to decline. I talked about this a few days ago, that I thought we might see 1.56 or 1.54 before we see a bottom. With the 10-year declining like it has been, that takes any pressure off of the inflation expectations, and it looks like that's what's going to continue as we end this week. So it's possible for us to see a continued surge in the S&P and the other indices as we finish out this week. So let's go ahead and take a look at the charts, see how the end of the week is set up. As I review the WaveTech database, what we're seeing here is a continued buying spree, as we saw 766 new buys and 201 sells, giving us a positive bullish ratio now of 41.35. So the magic number that I talk about all the time is that 42% level. I suspect with a stable to up session on Friday, we'll see this number jump above that level. It will signal more traction in the database, telling us that more stocks are coming into trend phase, and this is likely to sustain a rally over the next several weeks, and many as 6 to 8 weeks, at least from an acceleration viewpoint. So as I've been discussing, we're a long ways from having any type of rollover at this time, and this market is going to continue to move higher into the pattern, and we're looking at some significant numbers today, which I'll cover in the S&P section here in a minute, but there's definitely plenty of traction going on here and plenty of leadership starting to emerge out of the database. And remember, this is Friday, so we will see the output of our models. The intermediate models continue to be at 75.93%. I don't expect to see any material change there. The key number to watch for right now is 68% on this database. I don't think we'll see a lot of new traction here, but it is possible if this market is going to go into the next phase, and we could see this database move up into 82, 86% on the upside. We'll see if we can get that type of traction. My expectation is more of a stable pattern to come out of the intermediate models and just keep a status quo with the possibility of a continuation of traction coming into the numbers I just mentioned. As we begin to review the S&P 500, now we were up almost 10 handles earlier. We've now faded since I did the front end of the commentary to only up 50 cents on the session. The NASDAQ was up about 0.3, 0.4 at one stage. It is now negative slightly by about 7 handles. So we've seen a reversal over the last half hour, 45 minutes in the markets. As far as the overall trend goes, as we look at the configuration, I've been talking about this the last couple of days, we continue to see the market grid range actually contract, and that is somewhat of an issue here in this type of pattern, especially since we're seeing the PPM starting to turn over a little bit. PPM2 surprisingly has cut through its first derivative. PPM1 is turning down, but it's still above its first and second derivative. It is at a trend level above 0.25 with a reading of 0.3124. So we're likely to see this market continue to stay in this very narrow range. As we look at the expectations, we've actually printed overnight just above the R2 number, which was 4,100, and the low and the S1 is 4083, and the low so far overnight is 4087. So we could look at a possibility of an S1. We've already printed an R2. So just like in last night, I thought we may have been printing the upper end of the range. It was pretty much what happened. We did see a retest, but the thing that I mentioned on my Twitter feed yesterday is that we did see a very aggressive buying come in right at the close, and after the cash market close, we saw another surge as the futures were able to print into new highs. So we were seeing some follow through overnight, but like I said, we faded here briefly, but there is some vulnerability to the downside. If we were to take out STX number at 4066, that would be a problem. I don't see that happening. In fact, as I mentioned, S1, R2 is likely to be the range. We could see it print into the R3 level today because there still is a bias to the upside. As we look at the SPX, this contraction of the daily range is very clear here on the market grid. You can see that we now have an expectation now of about 35 handle range. RXT is 4113, the STX is 4080. My expectations, just like with the futures, are an S1, R2. That would suggest we would see a range of 4093 to 4105. The extremes you can see is 4113, R3 is 4109. So we could print into those ranges. If we get above 4100, the futures were able to get over 4100 earlier, but they did not hold it. So it looked like we're going to come in about flat. So it won't take much to at least test 4100 and start to see the market move toward this R2 number. But the key is, as I mentioned in the opening comments, is looking at the weekly range. And you can see we basically came in positive on the week and just moved higher throughout the week. R3 is 4096, and so far we've been at 4098. So we printed an R3. RXT on a weekly basis would be 4119. I don't see us getting above that level, but the one thing to point out here is that PPM1 is at a 0.98, PPM2 0.64, and PPM3 at a 0.67. These are very robust trend numbers. I've talked a lot about this. The intermediate trends will continue to drive these markets higher. Even if we do see any pullback, that 10-period moving average right now is 39.32 on a weekly basis, and that will be your major support, and it is moving up at about 35, 40 handles per week. So that suggests that that number will be around 39.70, 39.75 as we come in next week. I don't believe we're going to get anywhere close to those numbers, but if we do, that will be major support. As I review the NASDAQ futures, what we're seeing here is we did rally earlier in the overnight session. We got to a high of 13,841, R2 13,820, so we printed above that and just shy of R3. S1 is 13,713, and we're just above that level right now at 13,722. I think the range that is setting up on the NASDAQ, so if we do manage to get through 13,713, then the next level is 13,675. This would suggest there would be an inversion of a lot of what I just said tonight on the futures, but it looks like the probabilities are that we will remain between 13,713 and 13,782. I don't expect to see much action below those levels. PPMs, just like with the S&P, are very positive, 0.58 on PPM1. This is week. This is daily now. PPM2 is at 0.25 and PPM3 is flat, but all of these numbers continue to turn higher. And as I've discussed many times over the last several sessions, is my expectation is that we will ultimately get to make a new high, which would be above 13,890. And overall, my expectation with this momentum that's building, that we will see this thing continue higher next week. Let's take a quick look at the weekly as we closing out the weekly charts. And just like in the S&P, we've seen it print up toward the extreme. Right now, the high for the week, 13,841. R3, 13,798. So just above that, RXT, 13,939. So what I'm seeing here is that we're probably at the extremes for the week. And if we just maintain this thing and stay fairly stable coming into the close on Friday, we're likely to see everything continue to move higher. When the market grid is updated for Monday, we're going to see this thing uptick and slope to the upside, which will virtually confirm that we'll see an all-time new high. The final market that I'll cover tonight is gold. Gold is down 750 overnight. In yesterday's action, we saw a sharp surge into the close, and we were able to generate an RTX sell signal. RTX was 1756.80. We closed at 1758.20. So we did see this thing trade up into those resistance levels that I talked about. And now we've got an RTX sell, which suggests at least 1 to 2 days of sideways movement. Also, the PPM 3 continues to be negative, but is turning up. So we're still setting up this bottoming pattern. We could see a retest of around that 1729, 1727 level over the next couple sessions here. My expectation is that the market grid as we come into Monday will start to expand a little bit, telling us that volatility is starting to increase. Looking at the weekly chart, as I've been talking about, the 10-week moving average, 1753.30. We printed just above it, 1759, printing back at the 1750.7 level at the moment. So we're definitely trading right on that moving average. And we're seeing PPM1 down 0.58. This suggests that there's only about a 20% probability for the market to close above that level. Even if it does, we should still see some retracement as we come into next week. So as we look at the range that we saw this week, we're looking at low of 1721 that maps out to S1, and we look at R3 was 1759, and that's been exactly high, 1759.40. So almost a perfect S1 R3 hit for the week. And as I've been discussing, I'm still expecting to see this market move substantially higher, ultimately back over into the 1800 handle. This will complete the video for tonight. I want to thank everybody again for participating in the channel. Have a great weekend, and we'll talk to you on Sunday night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.